There it is on your screen. The SARB has decided to increase interest rates by 25 basis points, highlighting a number of reasons that led them to this decision. Interestingly, two members of the Monetary Policy Committee wanted 50 basis points. Let's delve into this decision that was made today. We've got Sanisha Packirisamy, who's an economist at Momentum Investments, joining us this afternoon. Thank you very much for your time this afternoon, Sanisha. I thought it was very interesting that two of the members did want a 50 basis point increase, but over the last few days we have been talking about the SARB perhaps approaching a more aggressive approach to mitigate against this extraordinary inflation that we're currently seeing.
Thank you so much for having me. Yes, I think, predominantly what will drive the decision between a smaller interest rate increase of 25 basis points and a larger one of 50 basis points for the next couple of MPC meetings will essentially be directed by the second round impacts of inflation. In other words, what is underlying inflation doing outside of what food and oil prices are doing? We heard that the inflation expectations survey in South Africa has also moved higher. And we know that the SARB is trying to aim to stem a rise in inflation expectations.
No, absolutely. What were some of the other notions that the governor brought up that you found interesting? I mean, he spoke about the growth outlook for South Africa, which is actually quite encouraging given the current times.
I think it was quite interesting that their GDP growth forecasts haven't really changed all that much. In fact, they've actually upwardly revised this year's GDP growth outlook to 2% from a previous 1.7%. Whereas if we look at the market expectations out there, the market is assuming that growth takes a slight knock on the back of higher oil prices, eroding the purchasing power of consumers in South Africa. Yet the Reserve Bank has mentioned that the potential for higher commodity exports can actually boost overall growth in South Africa. On the other hand, we saw significant upward revisions to the inflation number, even beyond what the consensus is expecting in South Africa. While the consensus is sitting at around 5.5% in terms of average headline inflation for this year, the Reserve Bank upwardly revised their number to 5.8%, which is almost a 1% upward revision in their overall inflation figures.
Right, and then of course he weighed in on the growth outlook, while be it being positive in terms of that GDP figure, he did say that growth will still be constrained by issues around electricity provision as well as policy uncertainty.
Definitely. I mean, in my view, I do think that the downside risks to growth prevail, although we have the Reserve Bank saying that growth risks are more balanced. On the upside, we do have, sustained commodity prices potentially providing some underpin for domestic growth. But on the downside, we still have higher global inflation, higher international oil prices, electricity supply constraints, high levels of joblessness, and we're also entering an environment of less accommodative policy, both on the fiscal side in terms of government not spending as much into the economy, and on the monetary policy side with the Reserve Bank expected to hike into the remainder of this year.
No, absolutely. And I'm glad you mentioned this issue around oil. The price of Brent crude, the South African Reserve Bank indicating will remain at around $103 US a barrel for the remainder of this year. I mean, that's quite a bleak outlook as a South African consumer, unless we see some amazing moves in the local unit.
So fortunately, the South African rand has essentially bailed us out a little bit. If we had seen a much steeper depreciation in the currency, we would have had to look forward to much higher increases in the petrol price. So for now, the rand is helping to shelter that. The rand has been strong because commodity prices have been strong. We've also seen significant inflows into our equity market, which has helped on the back of that. And as a result, we've actually seen a much stronger currency than one would originally anticipate, given the rise in geopolitical risk factors. Of course, if risk aversion does spike globally and the rand does take a knock, that would mean even higher domestic fuel prices and even higher headline inflation. And I think this is really where the Reserve Bank has pointed to upside risks prevailing on the headline inflation front.
Yeah, absolutely. And of course, it brings us to one of the questions around just the SARB following the global interest rate cycle. We saw, for example, the United States increasing for the first time since 2018 and a number of other countries following suit there.
Definitely, we are already seeing, on the global front, a front loading of the interest rate hiking cycle. And again, central banks across the globe are trying to stem the rise in inflation expectations and address the increase that is coming through on the headline number. And they're trying to prevent core inflation measures from picking up. So we've already seen, the Federal Reserve moving. We've seen the Bank of England moving. We have seen the European Central Bank tapering their purchases of bonds a lot quicker than what the market anticipated, even though rate hikes may still be some way off. But that is still some form of monetary policy tightening. In the emerging market world, we saw a number of countries already raising interest rates at the back end of last year, even ahead of developed markets, because they were quite worried about inflation picking up in those economies.
No, absolutely. And then just a final thought from you, Sanisha, a forward-looking kind of indication of where we're headed. He spoke about the geopolitical events that we are having. He spoke about a number of things that could impact the decisions of the Reserve Bank going forward. But just based on his pronouncements, his tone today, where do you think we're headed?
I do think we will see a bit of a front loading of this interest rate hiking cycle, especially if I look at the inflation forecast that the Reserve Bank has laid out for us, not only on headline inflation, but specifically on core inflation, which is your headline inflation less the impact of food and fuel, because this gives us some indication of how inflationary pressures are emanating throughout the rest of the economy. And with upward revisions on those core inflation numbers, to me, it suggests that we may in fact get at least another 4 interest rate increases this year. Again, also with the split view on the committee of between 25 and 50 basis points, it also substantiates the view that we might actually get a front loading of this interest rate hiking cycle, especially to stem those inflation expectations from de-anchoring.
Absolutely. Really tough times ahead for consumers, paying more for your home loans, your vehicle asset finance, and just overall inflation causing everything to go up in general. Sanisha, many thanks for your time this afternoon. That is Sanisha Packirisamy from Momentum Investment.